All right, hello everybody. Welcome out to this week's market bias update report for Sunday, January 14th and the trading week ahead. Diving right in here, looking at the S&P futures chart just opened about 2 hours ago for trading here on Sunday. RSI has slowed down. It has crossed back into sell territory. The MACD is setting a new lower pivot low and looks like it might be setting a lower pivot high as well. Chart, we have kind of a rising wedge formation, horizontal resistance up at 48, 41, and 50 cents. So anything basically below that horizontal resistance line and above the support line of this diagonal trend line connecting the last several major pivots on the daily chart is kind of our neutrality. Right now, I would not actually mind seeing the price either just go absolutely nowhere this week or breaking down below the 9 and 20 SMA and EMA, coming down into this diagonal support zone, and then kind of chopping around a little bit in there, filling out the rest of this triangle or wedge pattern, and then setting up a breakout after that. That would also give the RSI and the MACD a little bit of time to reset itself and give us a nicer break to the upside following that kind of price action. If we do break and close below this diagonal support line, then the next stop would be basically down to around 46.50. That will most likely be around where this 50-period moving average rises to between now and then. So either looking for a break of the 48-41 zone or a break of the diagonal support zone and then back down to the 50-period moving average. Going to be very similar look on the NASDAQ. You can basically take exactly what I said and just repeat it verbatim here. Similar RSI, similar MACD, similar structure. We did have a little bit deeper of a sell-off week and a half ago on the NASDAQ, but it was able to actually rally pretty hard and did reclaim its moving averages. So kind of tit for tat, basically the exact same chart as the S&P right now. Right now, I would kind of rate the S&P 1 and NASDAQ just after it with a 2. If we go out to the Russell 2000, a little bit more struggle here. You can see we tried to rally, tried to break the 9 a couple times and couldn't hold that 9 as new support. So it is still acting as resistance overhead. Really, at this point, we need to see prices get back above the highs from all 4 of these candles. So that kind of equates to around the 2005 dollar value. If it can get back above 205 and close above that, by that point, this 20-period moving average, which is starting to round over, would probably have come back down and aligned with that breakout zone. So a close above that zone would be kind of our trigger for the next bullish leg. If we toss this out to a weekly, this actually cleans up, and I really like the support here, this kind of double wick test right above the 9-period moving average on the weekly chart. So as long as that holds right around 1940, I really do actually like this pullback and setting up a break ultimately of these pivot highs right here, which correlates to about 2025. With a lot more gas in the tank, because when we originally broke out of that right here over the last couple of weeks, we had run all the way from this massive low way back down around 1600, and that's just way too overextended to have much gas in the tank for any further movement without some kind of a retracement to reset the risk to reward and reset that chart. So I do actually really like this on a weekly chart. If I had to choose an index to play, I'm honestly more interested in the Russell given that weekly time frame look than anything else. But it still needs a little bit of development. Like I said, we do need to get back above that 2000, 2005 level for that. Going out to the Dow Jones real quick, it has just been very, very well behaved, sitting here basically between 38,113 on the high end, and then going down to about 37,500 on the low end. Anything between that zone, just more neutral, more of the same. Anything breaking below that, I would think that it would probably be a quick trip down to 37,000 and then probably 36,500. So those are kind of the 2 levels on the downside that I'm looking. looking at, I do think it needs some more time for a breakout here, even if it did reclaim itself and break out right now. Just based on what the RSI and the MACD are doing, I wouldn't be super interested in that. I would kind of assume that it would be a fake out and come back down to retest that zone again. So giving this more time to develop. Going out to gold. Gold actually looking like it is trying to put in a bottom here. It tested its 50-period moving average, held it, is now fighting back up against some really important moving averages here, held the 9 and is now trying to break through the 20. If we get a close back above 2060, I will be interested in playing that to the upside based on my trailing stop indicator here. You can see the purple dots. If it closes back above that and that switches to blue, the price would be above 2060 at that point. That would be kind of my signal to start scaling back into gold a little bit. Going out to silver, it broke down all of its moving averages, looks a little bit more gross than gold does. However, we do have a nice potential break of diagonal resistance here, lining up with a cluster of a bunch of moving averages. We have the 250 and 20 simple moving averages all clustered right there. So a break and close back above $23 and let's say 90 cents would be a really good potential trigger to the upside. Otherwise, I'm not super interested in it. To the downside, coming back down to our diagonal support line down around $22 makes some sense if it's not able to regain this upper resistance channel. But I have a feeling that we're probably going to see a move to the upside instead of the downside. So the break above 23 and 90 cents is what I am looking for. Going out to crude light. Crude light fighting a good fight. Nothing super interesting here, honestly. It is still just developing its pinch on the weekly chart, holding the 200-period moving average as closing support, and also failing to gain traction back above the decreasing 9 EMA. Sooner or later, one of those is going to break. We are going to get a close either above the 9 EMA on the weekly or below the 200 on the weekly. And whichever way that breaks, that is going to be the direction that I am interested in trading it. So for now, just waiting and seeing the development. My guess is it probably resolves itself to the upside. I would be surprised to see oil take another dive here. But if it does, just gives us an opportunity to look for patterns at lower prices, and I'm never going to argue with that. Going out to Bitcoin. Bitcoin trying to hold on here. And I can't remember if it was in one of the weekly bias videos here, or if this was just a conversation that I'd had with one of our students. But I had talked about the lead up going into the spot ETF approval, which happened here just a few days ago in the chart on 110. That was the candle where the spot ETF for Bitcoin got approved, and that was a really, really big moment for this industry. However, I was talking about it and I was saying, this seems like it might be a buy the rumor and sell the news type event. Wondering specifically if Bitcoin would be able to hold and move higher on that news. One, because a lot of price action had already been baked in. And two, more importantly, in my mind, I was wondering if big institutional investors, which are now getting access to that spot ETF on Bitcoin for the first time, were going to be interested in buying it at these levels, or if they were actually going to purposefully try to drive the price lower so that they can corner the market and establish a big position in it at much lower prices. So far, it has been a sell the rumor type news. We kind of had a fake out breakout. It rolled over. Indicators are now bearish. MACD is bearish. RSI is below 50, so that's bearish. Moving averages, our 9 is rolling over and looking like it is threatening to cross below the 20-period SMA. And the SMA is actually starting to kind of get a little bit of a curl here. So where we are now, we are holding our diagonal support line and we are above our 50-period moving average. Those are two check marks for the bullish category. However, with these rounding moving averages and with the RSI and the MACD, I am not going to be surprised if we see price try to rally and come up into these moving averages around 44,000, not be able to hold it and roll back over and eventually test this 50-period moving average, which is currently just shy of 41 thousand. My guess is by that point it has risen up and has kind of aligned itself with this diagonal support line that we have, and that is going to be a very, very important price test if that holds or not. If it holds, my guess would be we would have several days of consolidation along it as that battle plays itself out between bulls and bears and eventually resolve to the upside. If that price level does break, however, you can see I have alerts down at 38,000 and 35,000. Those are my eventual downside targets if that 41,000 level does give out. And you can see on a weekly chart here, if I adjust to give you a look at that, that 4100 chart would also mean that we would officially have broken the 9-period moving average on the weekly chart. And the next stop would be down to the rising 20 period on the weekly, which by that point would be somewhere between this 35,000 and 38,000 alerts that I have set on the price chart. And those also correlate to the lower support level and upper resistance level of the last major consolidation zone that we have. So those are my price forecasts for Bitcoin. Like I said, has a lot of work to do on the upside. It is an asset class where it can power through resistance very, very quickly, especially if we see really good trading volume come in that supports a bullish move based on that new ETF. But outside of that, I'm not super interested in it at the short term. I think we do need to let it settle down and play itself out a little bit. With that said, I am really interested in Ether. Ethereum here. I always call it Ether for some reason. I don't know why. Ethereum, this is the futures chart, looking like a really nice pullback on the daily, back down into the 9 and also back into the upper portion of the resistance from this previous consolidation. Contrary to Bitcoin, its RSI is still in the bullish category, although looking like it's weakening a little bit, might have a little bit further to go in this pullback. I wouldn't be surprised to see it pull back into probably the 2,400 level, potentially breaking this daily 9 EMA, but still holding the 2,400 level is kind of what I am anticipating. I do like the MACD. The MACD kind of had a double top here, set new lower lows and lower highs, and then created equal lows here, and has since put in a new higher high comparative to that previous point of resistance in the MACD chart from last week. So I do really like the development here, actually. And if we toss this out onto a weekly time frame, you can see it's really done nothing wrong. It bounced off the 9, stuck the landing, had a big green power candle, and now it's just kind of consolidating in the top of the range. So nothing wrong here on Ethereum's chart. And the thesis behind this that I also am kind of basing my potential bounce off the 9 EMA on the daily chart and moving higher is basically that we've had this huge price run on Bitcoin, anticipating the spot ETF being released. It got released. And immediately my thought goes to, and I'm sure a lot of other traders' thoughts have immediately gone to, well, Ethereum is probably the next one to be in line for a spot ETF approval. I'm sure a lot of these big institutions that have gotten the spot Bitcoin approval already this past week are already in the process of submitting applications for an Ethereum spot ETF. And if we do see that, it stands to reason to me that we might have some further price appreciation as that news cycle plays out and the anticipation of that plays out. So in the short term, the next month and a half, honestly, I kind of favor Ethereum. I think it is going to outpace and perform better than Bitcoin moving forward, at least in the short term. Finally, let's go out to our metals really quick. Palladium here just got the absolute piss kicked out of it. I'm not going to mince words with that. It got absolutely crushed after a massive run, couldn't hold it, met resistance at the 200-period moving average, and gave pretty much all of it back. Now it is sitting here trying to build a support level right there, and we'll see if it holds that 972, 973 arena or not. I'm kind of anticipating that at least in the short term, the next day or two, we probably see a pop back up to retest this decreasing 9. I doubt that we break through it on the first try. My guess is we probably have some consolidation and chop here for a little while, but I do like that the MACD is kind of curling over and starting to show at least some form of a bottom here. And the RSI is hovering right around 50. So that does support kind of neutrality, at least in the short term. So I kind of see this chopping a little bit sideways, potentially testing the 9 EMA, and then eventually working higher. If we put this out to a weekly chart and just double check that, we do have a lot of slowing momentum here. Even though we had some volatility, we are still bracketed in a range here, instead of just the constant downward slope that we have had for months now. So at least starting to see some neutrality instead of just straight bearish patterns on palladium. And then if we go out to platinum, toss this into a daily chart, it just got absolutely smoked. When you are down this many days in a row, it makes sense that you have some kind of a snapback rally. So I wouldn't be super surprised to see some kind of a doji form here and then try to move back up and meet resistance around 935 at this 50-period moving average. Too early to say where it will go from there, if it will power back through that or roll over. Based on the chart right now, I would probably favor it rolling over and retesting these lows, if not below. But at least a little snapback rally into that 935 level makes some sense. Finally, if we go out to the US dollar, it has been just basing sideways, fully neutral for about a week and a half now. It is fighting up against its 20-period moving average, and a break above that in the high from 2 days ago around 27.52 would signal higher prices in UUP to come, and that would put some pressure on US equities. So we don't particularly want to see that happen. Similar concept in TNX, the 10-year Treasury Index. If I toss this out onto a yearly chart, it still looks bearish to me. It is below its 50. It is below its 9. So even if we do get a little bit of a reprieve here on the daily chart, I'm kind of anticipating this resistance around 41 holding, this 50-period moving average kind of trending down and meeting up with the price action there, and then seeing it roll back over and test these lows. So that's kind of where I see that going. Finally, let's head out to our economic data to wrap up. Monday, nothing coming down the pipeline, so that's good. Be technical conversation only. Tuesday, we have Empire State Manufacturing Index, so that'll be important. Wednesday, core retail sales and retail sales month over month will be important. Unemployment claims Thursday, and Friday consumer sentiment coming out. So a handful of economic data points coming out this week, but nothing too serious. Of all of these, I'm probably most interested in the retail sales and the unemployment claims, but each of these will have an impact on the market. I'm just not sure how much of an impact it'll have after last week's economic data. I think last week's economic, data was much more important than the slate this week. So I think the move from that has probably already been baked in. And at this point, price is probably going to be more dictated by the start of earnings. We do have a lot of banks that have reported already, and more coming down the pipeline in the next couple of days. So keeping an eye on the financial sector for earnings reports coming up the next few days will be important. And then finally, let's go out to our heat map. This is a 1-week performance showing the percent gain or loss across the board for last week's price. And you can see energy just got smoked. Basic materials, utilities got absolutely smoked. Banks, the banks that reported earnings so far, most of them had gaps down. They didn't have bad earnings reports, but they just didn't exceed expectations. And the financial sector had already run so hard going into earnings that it was going to be very hard to hold that level. So they pulled back a little bit. And I'm actually interested in the financial sector. If we get nice patterns off of those pullbacks, that is going to be an area of the market that I'm very interested in. And you can see money starting to flow back into big tech. So big tech might be the next support coming down the pike for the market. So I'm really interested to be watching for patterns in big tech to potentially play the next move higher after all the consolidation shakes itself out of the market. So hope that helps, guys. As always, trade safe. Let me know if you have any questions, and drop a like and share anything you have, any questions, any comments in the comments section, and I'll be sure to get back to you. Enjoy the rest of your trading week, guys. Trade safe. Bye.